Hello Sector Watchers, welcome to the show. This is the 53rd episode of Sector Spotlight on Tuesday the 27th of October, recorded on the 26th. I'm Julius de Kempenaer and as usual I am your host for today's show. If you'd like to get in touch, please do not hesitate. My mailbox is open for questions and suggestions, and the comment section below articles and videos is a good place to share those with me and the rest of the world. Your feedback and your questions are appreciated. I'm always on the lookout for new ideas that I can cover in an upcoming episode of Sector Spotlight, so don't be shy. Today we're going to look at asset classes and sector rotation on relative rotation graphs, and as this is the last show of the month and we are very close to the presidential elections, we'll take a look at the seasonal patterns going into that event after the break. As usual, we will start with a quick overview of what happened in asset classes and sectors over the last 5 days, last week. On the left-hand side, you will find the various asset classes that we're monitoring here in Sector Spotlight. The benchmark, the Vanguard Balanced Index Fund, down 50 basis points, so not a very big week. And stocks, ITOT, and bonds, GOVT, are very close to the benchmark. Stocks did a little better than bonds, but not by much. ITOT was down 40 bips and GOVT was down 60 bips. If we look at those rotations, then we see that we have a sort of continuation of the rotation that started last week. If I go back 1, 2, 3, 4, 5, you see that it was rolling over. I'm looking at ITOT here. It was started to roll over, and that basically continued and intensified a little bit over the last 5 days. And the same goes for GOVT, which was curling up slightly at the end of October 16, and now 1, 2, 3, 4, 5. You see that GOVT rallied and ITOT came down. Again, a very good example that the position of the tail on the RRG and the direction is not necessarily reflecting the short-term performance of those securities. The tails on the RRG are looking for trends in those securities, and those trends not necessarily correspond with an outright performance. Real estate remains on a very weak rotation, very long tail, accelerated over the last 5 days. We saw, in line with GOVT, we saw other fixed income asset classes, corporate bonds, high yield corporate bonds improving a little bit, and the commodities, the two ETFs that I'm tracking here, DJP and GSG, are starting to roll over again. I think we discussed that last week, that I'm still not a big fan of commodities despite the short-term improvement, and you see that on the short term we now already have them both rolling over while inside the leading quadrant, and GSG is actually very close to crossing below 100 again. If we move over to the right-hand side of the screen, where we'll find our US sectors, this chart is ending October 23, so that was last Friday. And if you look at the performance of the various sectors, and we see that S&P was down 40 basis points, stock market here. There's actually quite a number of sectors that are outperforming the S&P over last week, with XLC the big winner, and utilities and financials also, and energy also. And well, I mean, these were the sectors that I was actually looking at from a pretty negative point of view, especially energy. Communication services we discussed last week. We said it was moving to the lagging quadrant on the weekly. So we got this little hiccup. We'll have a look at the weekly charts later on to put these daily, because this is daily, changes into perspective. Weakest performance this week for technology. down over 2%. That's pretty weak for the tech sector. I haven't seen that in a while. Real estate remains very weak, or is very weak, remains very weak. That's the tail that goes down here. And we have industrials and staples slightly down. Staples 1.2 and industrials almost in line with the index. If we look at the tails, then we have communication services on a nice heading towards leading. We'll have to see how that works on the weekly chart. We have utilities inside weakening but curling up. That's actually a pretty good sign. We have financials on the left hand side, but if you look at this, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, that's very stable. It's on the left hand side, not very far, but it's not super strong either. Energy, inside improving, but already rolling over at high momentum, at the highest momentum of the whole universe going into last week. That's gone now. Little sideways move there for energy, but still way too far to the left to be anything meaningful. We had discretionary. That looks a little bit like financials, but now on the right hand side. 1, 2, 3, 4, 5. So you see it moved into weakening. 2, 3, 4, 5, and now it's sort of stabilizing on the right hand side, but getting closer to the 100 line. So I'm not sure what's going on there. We'll have a look at the weekly chart later on. Healthcare inside lagging, 2 days of a small hiccup. That's not very strong yet. So remains in lagging and a weak sector. Materials is on its way to cross over into the improving quadrant. So that last 5 days, materials actually picking up a little bit of momentum. That's good news, I think. If we go back 1, 2, 3, 4, 5, then we see that move already started in the week before last, and now that continued in the right direction. Now we have industrials. That's actually a pretty nice sector because we were in weakening, and you know that when it curls up in weakening and it starts to move up, that's usually a good thing. And we see that move actually continued last week, and as of last Friday, the industrial sector crossed over into the leading quadrant. On the daily RRG, it's actually the only sector inside the leading quadrant, which is very interesting, actually. Then we have staples, strong momentum, not yet picking up too much of relative strength. We have got real estate, we saw that, and we saw technology. So that was the overview for this week. Let's quickly move to the charts, to the longer term charts, and I'm gonna stick with the asset classes. And there we move to a weekly chart first, so we got a little bit longer term perspective. Again, here we see more or less a continuation of the rotations that are in play already for a couple of weeks. I want to focus on the stock bond relationship, GOV versus ITOT. And if we bring on the ITOT chart here, the weekly, then we see that 80 level has proven to be too much of a resistance. We're coming down. The rhythm of higher highs and higher lows is, or at least the higher lows is still intact. The higher highs has now been capped by the previous high. That's a small negative, I think. As soon as it's been taken out, that's all good. And we see the effect on the relative strength line of stocks versus VBINX, where that horizontal level is coming in that we discussed last week. So far, market's still doing okay, but we should not get too much downside. I'm watching this previous high here in ITOT as support, and then the level just below 72.5. If we go to the S&P chart, that probably resonates a little bit better with most people. Then we see here that let's put it at 350. 355, that area is definitely important now, and I'm looking for support in the area around 320. If that breaks, we have a double top, and that would be bad news for the market. We're not there yet. As a matter of fact, we just came off those lows here, so that's still pretty good. The only thing that we need to see is relative strength starting to improve, and that's now rolling over on this weekly chart. And is it worrisome? Not yet, but it's not the best that we could have seen. Let me put it like that. If we quickly go to Gov, that's our government bonds, that's getting weaker and weaker. That's getting closer to completing this double top scenario, which would be bad news for bonds, rising yields. And that corresponds with that rising yield curve that we've been discussing a few times already. That yield curve steepening is accelerating right now, and we'll have to see how that plays out in that stock bond relationship. I've actually created that. We're going to look at that later on. Let's move to the sectors. We have the S&P 500 here, and let me pick out a few sectors that are worth looking at. We look at energy, that remains a super weak sector. Technology, let's look at technology, because that was a pretty weak performance last week, and you see that rotation here on that weekly tail. It's a very short tail, but it's heading towards the lagging quadrant, and it is weakening. And if you look at the chart here, you see that the last peak wasn't able to take out that last peak. That if we draw a trend line here, that would still be intact, but I'm not very happy with the way these RRG lines are behaving. That RS momentum line is rolling over further below 100. That's why it's putting the tail inside the weakening quadrant. And and we see that the RS ratio is rolling over. So I'm getting a little bit cautious with the technology sector. It's still, it's still an uptrend, but there are some cracks in this very strong trend as we've seen it. We quickly go to that communication services sector, which was very strong last week, but you can see here on that weekly tail that it is closing in on crossing over into lagging, and we saw that strong move on the daily RRG a minute ago. Let's see how that works out on our weekly price chart, and we see that lower high is even more pronounced than the one in technology. So some cracks in this sector as well, especially if you look at the RS ratio that's now rapidly approaching the 100 level. If I need to look for good news, then it is that it looks as if we have a relative strength line that is still able to hold above the breakout level of that range that we saw in 2019 and early 2020. Other sector that requires our attention is consumer discretionary. Also a short tail, and we know that these short tails indicate stable trends. So we have discretionary still at a stable trend, and it's far to the right. As a matter of fact, Staples discretionary is furthest to the right. So technically speaking, the consumer discretionary sector is now, in terms of relative strength ratio, the strongest sector in this universe. Now let me bring up that discretionary chart, and you can see that where we saw that on technology and communication services, that most recent high was lower than the previous high, and we see that in discretionary that high actually managed to take out that previous high. So that's a strong sign. So this rhythm of higher highs and higher lows is still intact. We see RS ratio rolling over and momentum going below 100. I think that for now we can see this as sort of a temporary move, because this trend in relative strength is still strong, and it sort of just needs a breather, and I think that that's what you see on the tail, which is still very short in nature. Which more do we have? Financials. Always interesting to look at financials. If we look at financials, then if we browse back a little bit in financials, we saw that, here we moved up and now we moved down again. So sort of undecisive, you see this sector moving up and down inside the improving quadrant, doesn't really know where it wants to go. The fact that you're in improving and you're not picking up on momentum and actually going lower is not a super strong sign. If we look at the chart here, then we see that indecisiveness back in the chart, where we have something that I think can be labeled as a symmetrical triangle, indecisive, moving sideways. So we're actually sort of looking for a break out of that triangle pattern that's spanning a couple of months now. So it's getting rather long for a triangle, but I think it's still sort of valid. We're not at the apex yet, so for a valid break out of a symmetrical triangle, you need to be around 2/3 of the pattern, and I think that that's the area where we are about now. I don't think we can safely say that it's going to break out to the upside or the downside, so it's really indecisive what this tail tells you. And if we look at the ratio of financials versus SPY, then we see back that indecisiveness here as well, just hovering around that support level, breaking it, getting back above it, breaking it. So lots of uncertainty for this financial sector. RRG line starting to move sideways. We just simply have to wait and see. For the time being, it's below, RS ratio is below 100, so it's a relative downtrend, and I think that you can see that here, with a potential low coming into place. But it could be a low, it could also be a plateau from which we're going to break further south, further downward, and then we'll see this tail rolling over. We're going for a quick break right now, 20-30 seconds, and after that we're going to talk about more sectors which I avoided to talk about right now because I know that they are interesting to watch from a seasonality point of view, which is what we're going to do after the break. Stay tuned, we'll be back in 30 seconds. And welcome back. In the second half of the show, I promised we're going to talk about seasonality, and that's what I've set up on the screen. On the left hand side, there's I expect most people know this by now, the spreadsheet that shows the seasonality for all sectors. And there are actually just a couple of good outliers with high and very low readings. It's actually 5 sectors that are worth our attention from a seasonality point of view. If we start with the weaker ones, because these are easy. If we look at energy outperformed the S&P 500 32% over the last 20 years in the month of November. That's not very much, so you expect energy to underperform again in November. And if we look at the tail on energy, I think that there's not a lot of doubt that that is a very weak sector, and that's, as we saw that tail on the daily, that's rolling over as well. If we look at the price chart, that is still a very strong downtrend. So I'm pretty confident that energy will live up to the expectation that November is going to be a weak month. The second sector that is historically a weak sector in the month of November is real estate. And if we do the same exercise and we go look at real estate, we see that on the weekly It's moving into the improving quadrant, but look at those week-to-week observations, very, very close together. And if we look at the daily RRG, we see that real estate is inside the lagging quadrant, just picked up a little bit of momentum, and that's just for today because this was last Friday and this is today's price action. It remains weak, and if we look at the real estate chart, then we see that this ETF is still captured in a trading range, horizontal trading range, and the relative strength line has broken below an important support level, which has pushed the RS ratio well below 100. So this little pause, this little plateau moving sideways is causing that momentum to go above 100. All in all, I don't expect a lot of good things for the real estate sector for the month of November. The outlier is utilities. Utilities historically was very weak in November, and I just cannot see that back on the chart. If you look at the RRG, then you see a pretty decent tail on utilities, inside improving with increasing velocity on the week-to-week distances. And if you look at the daily, then we actually see a rotation from weakening back into leading, and it's the strongest sector on that daily chart. So that is good news for utilities, and it does not match with the expected seasonal rotation. If we have a look at the price chart for utilities, then we see that this one broke out of a symmetrical triangle and is moving higher, took out those highs, and the relative strength line is now back into the range, and the RRG lines are pointing upwards. So utilities, I do not think is matching the expected historical rotation. Now for the two sectors that are showing strong or suggesting strong performances going into November, we have materials and we have industrials. We start with materials, that's 68, it's almost 70%. Bring up the tail here for materials, it's in leading with a very short tail. It means that it's a stable relative uptrend, which is losing a little bit of relative momentum. If we look at the daily version, then we see that materials actually made it into the improving quadrant and is starting to accelerate towards the leading quadrant, which is nicely coinciding with the position on the weekly RRG. And if we look at that price chart, then we see that is like a lot of sectors in the market, it has touched its previous high. It's still well above the breakout level, and what I do like here is the fact that this RS line seems to be really turning around, and we're holding up here. It's a sector of higher highs and higher lows in place, and if that rotation continues, then materials could be in for a solid performance in the month of November. And finally, the biggest number is for industrials. 89%, almost 90% of the time, the industrial sector outperformed the S&P 500. If we look at the weekly tail, we see that's inside leading, but over the last few weeks it's been losing a little bit of momentum. And if we do that on the daily chart, we actually see that that rotation is now nicely back into the leading quadrant and starting to tilt to the right, so picking up new relative strength as well, which could be supportive to turn this tail back or more back to the right, picking up more on the RS ratio scale. And if we finally bring up here the industrials chart, then we see here that that rhythm of higher highs and higher lows is still intact. The big difference with a lot of other sectors is that this sector did not yet break out to new highs, which a lot of sectors have done in the last few weeks. This one is just approaching those highs, but that rhythm is still very strong. And you see that this consolidation pattern, bottoming formation, seems to be executing. Wealth strength ratio is pushing further up. There's a little hiccup in momentum going down. That's why it's coming down here. That's caused by that decline in RS momentum. If we can hold all this, if we can break this high, and especially if we can break that 82.5 high in industrials, then that will certainly live up to the strong expectations from a seasonal point of view. If we quickly look at the expected returns, then we have materials at 1.3 and industrials at 1.2. So these are really not only in terms of outperformance, but also in terms of performance. In relative performance, they did very, very well historically. And we have energy, which historically, again, minus 1%. So that's underperforming. That's underperforming the S&P by 1% in November. And real estate, minus 1.5. And utilities historically has been underperforming SPY with 1.6%. Again, from the rotational point of view, I don't see that at this point in time. And last but not least, I want to show you I think, interesting similarity between the rotations of stocks and bonds 4 years ago and at the present. On the left hand side you see the rotation of ITOT versus GOVT in the last week of October 2016, so just prior to the elections. And you saw that ITOT was in weakening, heading towards lagging, GOVT was going the opposite way. Right now, this is the week leading up to the elections, and you see that ITOT is in weakening, moving towards lagging, and GOVT is in improving and moving towards leading. And I think that's an interesting setup, an interesting rotation that we have to keep in mind, because we all know what happened after the elections in 2016 and the move that we saw. And it becomes even more interesting when you look at the charts that belong with these time frames. This is the period 2012-2016, and this is 2016-2020. And you see a very nice rally, and then you see a plateau of about 2 years. And we saw more or less the same here in 2018, 2019, going into 2020. So we're testing these highs. We all know that the market broke above that resistance, that heavy resistance in late 2016. If the market is able to do that again and turn that rotation around in favor of stocks, then I think we will be nicely surprised by the performance of the market going into 2021. We're not there yet. We'll have to wait and see. But I thought that this rotational pattern was very interesting to share with you. Time's up. This wraps up Sector Spotlight for today. And thanks again for watching. If you liked the video, please do your thumb magic. If you have any questions or remarks, please put them in the comment section below this video and I will respond there as well. Or in case you're too shy or you prefer not to communicate your thoughts in public, that's fine too. My mailbox is open. I read my mail and I answer. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. Replays are found on the StockCharts YouTube channel. For now, please stay safe and I hope to see you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.